Hello everyone, welcome to this new video on a fresh new feature which we have introduced in Opstra. I have with me Raghunath, who will take us through and explain that new feature. It is called Unusual Options Activity, which is again a very exciting feature and can be of tremendous use to traders who are quite active in the market. At least it gives some idea of something unusual happening in some option, maybe some stock, strike price or whatever. So I'll hand it over to Raghunath to explain it further. Welcome, Raghunath.
Yeah. Hi. Thank you, AP. So I'm going to share my screen. As you know that we have been introducing a lot of new features in Opstra. And as part of that, we are now going to introduce, we have already introduced, but we're not talked about it. It's called Unusual Options Activity. So it's basically nothing but we scan through all the options contracts. So there are around 17,000 to 20,000 options contracts on a given day. So we scan through all those option contracts, both weekly options as well as monthly options, for both indices as well as stocks, FNO stocks. And then we look for some unusual activity in them. So, so let me first show the app, and then I'll talk about what do I mean by unusual activity. So you can go and access this tool from Open Interest drop-down menu and click on Unusual Options Activity. Now, if you go here, you will be presented with this table. And here, so what we are looking here is few things. That show me an option contract where the volume activity in comparison to open interest activity is very high. Okay. So what it means, why? So when volume activity will be much higher than options activity. So open interest. So this will happen when there's a big buy in the options. Some big player, whether because of insider trading or some information somewhere you got from, is buying in big quantities. That is one. Or somebody is trading a lot of volume to enter into this particular position. And or one another possibility is perhaps they are doing some kind of hedging. So this could be any one of them. But what we are mostly interested is if somebody is buying in huge quantities. So we kind of want to piggyback on that kind of activity and gain something out of that. So here, very high volume activity in compared to open interest, that will indicate there is some kind of unusual activity in that particular option strike. Okay.
So does that mean that for that specific strike price there is a huge amount of volumes, but not that much of change in the open interest?
Yes. So basically, there a lot of trading is happening. So somebody is selling, somebody is buying. So they are counteracting, and there is another player who is using a lot of volume, and then is buying up those options. So huge volume activity compared to open interest activity. In general, normally if you speak, this kind of volume activity may be 1 to 2 times of open interest. But then there is something unusual. This will go like, several fold, 5, 10, 20, 30 like that. Okay. So those are the things that we are particularly trying to look at. Okay. And another thing that we are looking at here is that there might be this activity in one particular stock in multiple strikes. Okay. Right. So that means that there are many market participants who are, for some reason, it could be results, it could be, there could be many other reasons because of which these retail or even other market participants are interested to enter in this particular stock. So there's a huge demand for these options. So that will also can increase this unusual activity. Okay. Now, so according to, based on the observation that we had so far, using this analysis is that if the volume activity is 5 times that of open interest, okay, then we think that is a good unusual options activity, and it is worth looking at as to what is happening in that. And maybe this analysis cannot be used in a standalone mode, but can be used in conjunction with open interest of other strikes as well as some kind of price action. So there could be multiple ways that we can tackle on how to trade based on this particular information.
Yeah.
Now let me explain this table. So here we have a ticker. Ticker is like which stock this unusual activity is happening, and what is the current futures price, and what is the price change. Like so far, with respect to previous day, what is the price change, and which expiry is this happening in? Okay, because there are multiple expiries, and usually we are in the last day, so we should ignore. Ideally, we should ignore the last expiry day. Current expiry should be ignored. And then what is the symbol? Like which strike that unusual activity is happening, and what is the price of that particular option, and how many days are left in that option days to expiry. So since it is zero, which means it is going to expire today, so we can ignore simply. And what is the implied volatility? Like is it high or is it low? So that also we can look. And what is the volume and open interest? So this is what we are looking at, which we are more interested in. The higher the volume with respect to open interest, we'll get this vol-OI ratio. Okay. And based on this vol-OI ratio, we can say that there is some kind of unusual activity. And here we also providing a time at when this vol-OI unusual activity is 5 times of that of open interest. That volume is 5 times of that open interest. Whenever that crossover happens, we are marking that time so that we know that where to look at, like when this particular unusual options activity has happened. Because just by looking this, you will not know without this time, you will not know when this has happened, right?
Right.
So that's why we have kept that. And also we can, sort this based on time. Like what is the latest time? Yeah. So this is the latest unusual activity that we are observing in this particular strike price of this particular stock. Okay. Now let me do this.
Which are the columns on the basis of which it can be sorted? The ratio, the time. Can it be sorted on IV?
IV, yes, also IV.
Okay.
Like look at the Adani. It's so huge. So yeah, I think it's sortable on pretty much expiry and expiry and DTE, IV, volume, open interest, volume over ratio, and time.
Okay.
So yeah. So now let's look at some of these activities.
Yeah.
Now, obviously, we are saying that this qualifies as an unusual activity. And obviously, if somebody has some other idea and they want to use much higher value, and they're free to do so. And if you look at the time, like what is the earliest time that has happened? This is in Mannapuram at 9:17. Oh. And then another one is happened in Maruti around 9:18. We saw this. So now, so if you look at these option strikes, actually, these are slightly out of the money.
Yes.
Okay. So out of the money is fine, but I will be more interested if it is at the money. Okay.
Right.
So this is confirming, like if you have multiple strikes for the same stock, it is confirming for me that there is some kind of unusual activities is going on. So I'm looking for something that is close to at the money. Let's look at this Maruti. This is the closest to at the money here.
Right.
It also good vol-OI ratio of 12.8. So if I click on this, okay, it will show me all the information required to analyze that particular strike price.
Okay.
So there are 5 different information that you can gather here. One is that the shaded area is the futures price, so that I know to compare, like with respect to futures, what is happening in this option. And the yellow line here at the bottom, or like dark brownish yellow is the open interest, okay? And this orange line is the volume. And the vol-OI ratio is the dark brown one is the vol-OI ratio that you are seeing here. It's going up, okay? Now here we have marked that at what time point that ratio has gone up above 5, vol-OI ratio.
Okay.
So this has happened
that
around
vertical
10.
line, that dotted vertical line will remain like that.
Yes, will remain like that. Whenever that crossover has happened, that vol-OI ratio greater than 5, then that is marked. So you know that some kind of unusual activities happened. So I want to look at what has happened. Okay, so
Right.
here the open interest is slightly increased, but the volume has increased even much higher. If you look here.
Correct.
So there was some kind of tussle here, but overall they were able to increase the open interest here. And imagine one thing here. So let's say I got a signal on this call option and the vol-OI ratio is greater than 5. What usually it indicates means that this is bullish in that particular stock. And if it exactly happens with the put option, okay, then for that strike price it is bearish.
Right.
Okay. Now as you have seen, as I've shown you there are multiple strikes of Maruti which are showing the same activity, which means that some kind of bullish activity is happening in Maruti overall, not just in one strike but multiple strikes. Here I chose 10,100 because that is the closest to at the money.
At the money,
like it was, when it reached here, it's around 9,900, something like that. We can also look at if there is 9,900 also.
Yeah, Maruti went up here, quite sharply today. Yeah.
Yeah. So here, if I bought, for example, this put option somewhere here, 135. This went
option.
all the call option, yes. So this bought at 135. This went all the way up to 251. So almost 120 points. So just by buying this option, it would have given around 12,000 up to like at the peak. And if you still held maybe 90, so 9,000 rupees or something like that.
Yeah.
So that is one possibility. So you could do, for example, you could buy a call option. That is one choice. Or you could sell a put option. Like if you don't want to take the risk of volatility or something like that, or sideways activity, then you could sell a put option. Or you could buy a call spread. Or sell a put spread. So there are 4 different ways you can enter this trade depending on your risk appetite. If you are a defined risk trader, you will buy a call option or do the spreads. And if you want to take a little bit more risk with a stop loss, then you can sell a put option. Either one of way. But the good thing is that this will be intraday trade only. So here we are not going to carry it in positional way. So you enter and then you exit depending on your target or with some kind of stop loss or trailing stop loss. Could be anything. So this is one example.
What it means is this tool can be used mainly for intraday trading. Whether you want to carry it forward tomorrow, that is a different basis altogether. But this tool gives only for intraday.
Yes, yes. So now look, as I said, 9,900 was the price when Maruti started today in the opening.
Yeah.
Now if I look here, is 9,900 call, and it's the same again here. So 246 and it's now at 334. So again, some 90 points. So multiple strikes, all suggesting the same in Maruti. You can see here. This is the one I think we discussed, and this is the one. And let me see if there are
even 10,600 was 10,000, 10,100, 9,900, 10,200.
Yes. And all gave at different time points. So as the market was progressing, so this kind of unusual activity is shifting to other strikes as well.
Higher strikes, yes.
Yes. So basically, I mean, you can see clearly that Maruti something has happened there.
Yeah.
That is one. Now, can we look something? Let's say look at some latest. Maybe not latest because maybe around 11 o'clock, something like that.
Titan.
Okay. Titan. Okay.
Yeah.
So,
Yeah, but that was
this
today's
is, yeah,
expiry. So
yes,
anyway.
today's expiry. Oh, let me do one thing. I can do like this, and then I go down. Yeah, it's better. Can we see some more?
Again,
Coforge, for example.
Maruti is again appearing naturally. Yeah, Coforge.
Yes, Coforge, for example. Yeah, this one is better. So here, so this happened after the market has moved.
Yeah.
So this is slightly late entry. So maybe this may not give such a uh, good entry. For example, if you want to piggyback on that. So let me check if there are any other Coforge ones. Let me check. You can just Coforge. And then here. So 5,300 call. Let's check. Oh, it gave much later.
Yeah, it's much later.
So yeah, I don't think we got anything interesting. Yeah, these all came much later. So people might have jumped after the stock has moved. So that's why it's
Yeah.
important to look at the price change also. If the price change is very high, when you got this crossover, then maybe we can avoid that kind of scenario.
Right.
Because prices already moved in that case.
Correct.
Okay. So let's look at some put options, let's say. Adani puts, but it's happened in both of them. So maybe it's not that useful.
MFSL 900 put.
MFSL, nothing. Came much later. Okay. All right. Anyways, so basically you'll get, multiple entries.
Maybe
And,
I'm just getting an idea. Instead of stocks, if you can look at indices, maybe since Nifty was bearish since morning, maybe there was some activity. There is an option to select only indices, right?
Yes.
Yeah.
All right. So you can also do the same kind of stuff in indices also. But here one thing you have to remember that most of the time that the volume to OI ratio will be much higher in indices because a lot of trading is happening. So it can easily, cross that five thing.
Okay.
But what it will say is that it will tell you what is the direction of the market. Okay. So for example, if I do for 7th day, the bank nifty was showing bearish for all the strike options, most of the strike options.
Most of the puts are showing unusual options activity.
Yeah, unusual options activity. Now if I click on that, you see here it gave the signal around 952, and after that it fell. So that is why it's important that you get these signals earlier when big moves have already happened. When before the big moves have already happened. So here, this happened again, the around 182 to 343. And all, I think if you look at all of them, I think picture will be the same. Market went down or put option went up. So Fin Nifty also looking like same picture here. Let me check. Yeah, this one 19,750. Same thing after entry it went up, but then it went down again. So yeah, except for Nifty, I think most of them have given. Nifty also gave, but not as predominantly as Bank Nifty and Fin Nifty.
Right.
Yeah. So yeah, indices can also be analyzed in the same way, but mainly I would go with stocks. The stocks will clearly tell you, what is happening in this. Even persistent, for example, after move it gave, but even then it went up after the signal came, and then it went sideways. So yeah, so I mean yesterday we got Naukri. I mean I've been observing this for last several days, and you can easily catch at least 2 to 3 stocks early in the morning, which can be traded based on this signal. And obviously, if you add some additional analysis on top of this, then that will be better. Maybe, for example, in the case of Maruti, you can check what has happened with the open interest. For example, 28th September. So now, as you can see, the people are buying a lot of calls here, and and the volume also went up for them. It didn't happen the same in the case of puts, which indicates that there is some kind of bullish activity in this case. Yeah, that's what I wanted to show.
So there are two big takeaways for me. One is look at this unusual options activity in the first 5-10 minutes to get an idea of which stock can be a good mover for that day. Number one.
Yes.
Number two, this is not a positional trade. This is mainly an intraday trade. And once you have an identification of which strike price is showing this kind of activity, that is not the only criteria to take a trade in that. You need other parameters, maybe like the chart of the underlying or chart of that option or some other information to identify what is the trade. But it tells you which strike price can be traded that day.
Yes.
It can be long, it can be short, whichever. But then it tells you a cutoff time after which something is going to, because of the huge volume, something is likely to happen further.
Yes, yes. Yeah. And another point is that it should be entered when the move is not that big. Maybe if moved 1%, then you can enter, and that's fine. But if it's moved 3-4% already, then maybe it is too late. Yeah. That's one point.
But you can always keep a track of. In fact, I have another idea. Of course, since this is quite new, even I have not observed it that much. But since now that Maruti has shown this kind of an activity, how it can be used in future, even for a positional, so that will be a good way to track it. For example, even 10,100, 10,200 call has shown unusual activity for September. So maybe something is likely to. So if you keep a track of the chart, the call chart or Maruti chart, who knows, after a pullback, it might again give a good trade later on.
Yes.
Yeah. Yes. So that is another positive which can be looked at for the future. Of course, this is not a positional trade. Like you said, it is only an intraday trade, but you can note down these strikes for the future.
Yes.
Yeah. Okay, I think that's all, right?
Okay. Yeah, that's all.
So this is a new feature which has been added only a couple of days back, so you can use it. And this is not going to be free. Of course, it is going to be free for 1 week, right?
Yeah, Raghunath? For 1 week, and then we'll make it paid.
Yeah, so anyone can use it for now, but after 1 week, it will be only for Opstra Pro subscribers. And it is there in Opstra for solutions as well as Opstra for securities. So you can use it for the next 1 week without any cost. So happy trading, and thank you, Raghunath. See you some other time.
Yeah.
Thank you.